What's up, legends? Welcome back to a new trading week. As you guys know, if you've been watching this channel for a while, Tuesday is the real trend day, or the start of the 3-day swing it should be. So I'm going to talk about that in this video and whether or not I think we're actually in the 3-day trend already, or what I see happening according to the heat maps, which are telling us certainly something. Of course, our high block liquidation levels and some pretty big news events that we've got coming up this week, which will throw the model out. So if you are interested in this sort of information, be sure to smash that like button, hit subscribe if you're not already subscribed, and be sure to turn that bell icon to all so that you can be notified every time I upload a new video. Before I get into this one, just an apology that I didn't do an update yesterday. I am not feeling the best. I was not great all weekend and I'm still not great now, but I'm here because I don't want to leave it another day, and that at the very least deserves a like. So let's talk about what I've drawn on this chart. And as always, because I missed yesterday, I'm going to quickly recap the weekend price action because it's important to know where the model starts at the start of a week so that you can count your rises and drops moving forward, and then also take into account the news events. So let's have a look at this weekend trap. This was something that I notified the Discord community of as it was happening. This here was the chart. So I do this chart on Sundays for the community before the markets open to give them an idea of how I assess the weekend price action, what I think the false move week beginning will be. And this was something I talked about, which is basically a double-sided liquidity clear out. And that's this here. So it comes from a clear trend. That's the first thing. From the clear trend, we move into consolidation. Whilst we're in consolidation, you have an initial false move. In this case, the false move was to the upside. And then you have a second false move that breaks the other side. So if the false move was to the upside, then the second move will break the support to the downside, and vice versa. If you were coming from a downtrend, the whole thing would work the other way. When you see this double-sided liquidity wipeout, usually the initial trend, so the uptrend, continues following this move. Now, this right here, when I posted this, was in relation to the US price action on Friday. Now, if you tried to trade last week, most of the week did kind of just go sideways and didn't really go anywhere until we had that false fake move to the upside on Asia session on Friday, followed by the false move to the downside on US. That's the double-sided liquidity wipeout. Then we went into the weekend trap, and this was when I posted that I think we're going to have continuation to the upside because of that move. What happened right after that post was this little move right here, which again was another double-sided liquidity wipeout because price had been held in consolidation all weekend, didn't really trend, didn't go anywhere. Then we had this initial move to the downside. Now this would trigger sell stops, so it traps short traders, but it also would stop out people who were long because most likely their stop losses would be just under this low right here, or they don't have a stop loss at all, which we talk about a lot on this channel. Then they came to the upside and did it the other way. Now this right here stops out those shorts that got triggered. Same deal, because a short order that got triggered here would have a stop loss just above these highs right here. Only needs to spike a little bit above to take them out, either liquidate or hit their stop losses, and then price is free to move because the contracts are collected both sides. And then what did follow that was the continuation that I was talking about. Now that continuation, which I actually mentioned in this post here, so the third option is we just break to the upside with no stop hunt, no fake move week beginning, because enough people are already trapped. There's already high liquidity spikes, and open interest shows us people are opening trades. Following that, once we got the second double-sided wipeout, I said to the guys in the Discord, wait for an MLW and be open to both. So here's what happened at the start of your week trade. Was right here was the W formation. So that was your trigger for false move week beginning if you want to trade that trade. There's nothing wrong with trading false move week beginning, but it is just a day trade. It usually does not last longer than at most the end of the US session on the Monday. So just keep that in mind. If you do want to trade false move week beginning, it's usually just a day trade, and usually the actual trend starts the next day. Now let's talk about these news events. Today, number one is a bank holiday in US. So by the way, if you are from the US, happy 4th of July. I want you guys to do me a favor. If you are having family events, I want you to not bring up crypto at all and see if your family ask you about it. Because if we are to head into a new bull market, it is holiday events like this when families get together that all of your friends who are not in crypto and all of your family who's not in crypto ask you how to buy it. So if your friends and family are not asking you about crypto, that means new money is not yet coming in, and that is a concern. So be sure to leave me a comment below this video and let me know if you're from the US, if your friends and family ask you about crypto on this holiday. Moving on, besides a bank holiday today, we've got FOMC meeting minutes tomorrow. That's likely to be volatile. We've got ADP non-farm, employment change on Thursday, unemployment claims, ISM services, jobs. Like Thursday's just going to be hectic, and then there's a few other things to happen on Friday. So let's just try and get through the next few days, and then we'll monitor these as the week goes along. So here we are now. We're in a bit of a tricky situation because after that false move to the upside, we do have a stopping volume candle here. It's not the greatest of stopping volume candles, but it's there. Like when I say it's not the greatest, I don't like seeing the wick below it. If that had have closed as an actual inverted hammer, it would have given me a little bit more confidence. But look, it counts, and it counts because it's an inverted hammer-ish vector candle at the very least at last week's high of the week. So last week's high was right here at 31,311, and that's where we got the stopping volume candle and then shifted away. So at this point, again, notified Discord, keep an eye out for an M formation. Don't love this stopping volume candle, but it's in a good spot, so keep an eye. We did shift away into the dead gap zone, then Asia came back to try and repeat the level but failed it. So that's what makes the M formation, is when price cannot get back into that stopping volume candle. Then what that tells us is the market maker is keeping these people trapped, because in order for this candle to exist, somebody had to long there. People had to long there. So people are trapped in longs here. Price comes back almost to break even, but not quite, and then it moves away. Now, I'm very, very uncertain about the current price action. That's what I want to be clear on. According to the model, which is whenever I'm unclear, that's what I do. I say, okay, what should happen according to the model? And if something different happens, and I don't trade it. This is how I maintain a high win rate, because I don't chop and change and think, oh, but it's a green candle, we're going up. It's a red candle, we're going down. I don't worry about that. If it's following the model, I will trade it. If it's not following the model, I will sit out. That's my trade plan, guys. So here's where I'm at right now, is that if this is the M formation, so far it's doing everything it needs to do. I've got the M, I've got the lower high that created the M, I've got the breakdown, I've got the vector that created the 50 EMA break. Everything ticks the box right there. Have not broken the initial low of the day. That is a concern. I do want to see it break it next, but it may just be too early. We have at this point come up to retest the 50 EMA, but we haven't shifted away from it yet. Now, if this is going to continue to play out, it can break above the 50 EMA. It's just that this move here, this retracement, needs to create yet another lower high. So it can't come back up into this zone if this M is to prove itself. So what I usually do when I'm in this sort of a situation where it looks like, you know, it may break the 50 EMA, I'm looking at the vectors that form the right side of the M formation. And I don't want price to get back above the highest one. So if I'm looking at this one right here, the highest vector I can find is this red one right here. So I don't want to see price break above this particular candle on the 15-minute time frame, which the highest point of that candle is at about 31,170. So this idea that I've got going on right here could come all the way up like this, and I would be okay to believe that we're going to get another few drops, providing if price got back into this zone, providing the candles looked weak, meaning I get a railroad track, an inverted hammer, a star formation, or just consolidate and look weak for a period of time. Anything like that is going to say to me, okay, yeah, I'm pretty sure we're going down for another 2 drops, and this is 1, and we've got 2 more to go. Now, this right here, this candle here doesn't bother me because prior to this candle happening, we did have high level heat map orders at 30,850, this pink line that I've marked off the 200 EMA. So we had them. So that's where I was expecting the right side retrace to happen anyway. It's just now dependent on price giving us that lower high for this to continue. Because it bounced off the 200 EMA, is there a chance that we're not going to retrace any further and we're going to go up and we're going to break all of these levels and just continue up into these higher liquidation zones? Yep, that is 100% a possibility. And like I said, if that happens, it's doing something different to the model. So I won't be opening new trades. As you guys know, I still have my long from 1975. So I'm not worried anyway. Like if this pushes to the upside, then I'm fine. But I'm just trying to trade the model right now for a potential new 3-day swing. And because I had those longs there that bounce up that should give me the retracement, what I want to see now as price is retracing, I want to see if there are any heat map shorts that will give me this top, that will give me this lower high. So let's have a look at trading light, and I don't have any. So it's a concern. It's a concern because price is right between the 200 and the 50 EMA. They're starting to move sideways. If you've been watching this channel for a while, you know that that's a no trade zone for me. So really all I have to rely on right now is the candlestick formations as they develop. These orders up here at 31,500, they've been there for a while. Look, we've got 1, 2, 3 candles price. So they've been there for more than 24 hours. They've been growing, reducing, growing, reducing. So if price does push up, there are sellers at 31,500. I would expect there to be some sort of a battle zone resistance, something like that. It's only 1K at this point in time. So if price went up from here, I think it would break it at this point in time. But just remember that the higher the price of Bitcoin, the lower that number needs to be. So 1K is 1,000 Bitcoin at $31,500. That's a hell of a lot of money if you do the math that is waiting at that level. So the higher the price goes, the lower this needs to be in order to be significant. So if they stay there and price does push up, that's an area I'm going to be watching to see how the candles react at that time. Having said that, we also have buys at 30,500. There's more buys currently than there are sells in those 2 zones. So 30,500 is where people want to, I guess, buy the dip on this if they can get a retracement. So now when I have a look at that, this 31,500 is up here. So it would be a new high. It would invalidate this M formation. It would be a new high. It's 100% possible right now, which is why I'm saying to you guys, the only final thing you have for a trade is to watch the candlesticks. The argument for a potential break to the upside is that we haven't broken the initial low of the day yet. We've had 1 week, 2 weeks, 3 weeks. Granted, this week did break lower. So that's interesting because ideally you don't want it to come back to these wicks at all. So there is that, but we haven't actually broken and closed below it yet, which is a point for the bulls. But on the bearish side, if we do get a retracement somewhere around this zone and we do head down, those 30,800, they're gone. They were picked up on this candle right here, which is what caused that push out initially. Now we want to see if we get a rejection here, will we come down? There's a liquidation level at 30,686, which will line up with the previous high of the day as well. So that's a good target for the next level drop. And then if there's more to go, we'll likely get a retest of say the 200 EMA, and then we'll come down for these other heat map orders at 30,500. That would be the ideal short position situation, but all of that is dependent upon price looking weak in this zone, number one, and then number two, coming down to actually break the initial low of the day. If those two things don't happen, then it is highly likely that we're going to go up and invalidate this M formation. So that's where I stand right now. I did open a short position when I saw this yesterday, so I do have a short position. If this swings around, it doesn't matter, who cares, but my long position is still open until the M is confirmed, and it's not confirmed yet. So it gets confirmed after we get the lower high. Just know that. Guys, if you learned something in this video, be sure to smash that like button. Also, if you're looking for somewhere to trade, be sure to check out the links in the description of this video to get some sign up bonuses and also 15% discount off your trading fees. I've got different exchange options down there. No matter where you are in the world, there are ways for you to be able to trade. So be sure to check that out. It's also an amazing way to support the channel, and I appreciate you very much for doing that. Have an amazing day. I'm going back to bed, and I will see you guys tomorrow.